6:15 p.m. onwards. So I hope all of you are looking forward to all that and more. So with that, once again, a warm welcome to all of you to the 9th edition of Payments Reloaded and Payments Industry Awards 2021. Without any delay, it's time to deep dive into our very first panel discussion. And the theme for the first panel discussion is around the Rupee revolution. And most importantly, the question being, can CBDC be a game changer in India? It's time to get the answers from our panelists. And first up, I'd like to introduce our session moderator. We have with us Geetika, Raheja, who's a partner director payments transformation, PwC India, who comes with more than 15 years of consulting experience in advising clients in areas such as strategy development, market entry, payments, digitization, process design, business planning, market assessment, and vendor selection, amongst many others. So while Geetika will be moderating the session, let me also invite our speakers here. We have with us Mr. Neeraj Chandra, Head Operations and Technology, India, Abu Dhabi Commercial Bank, who's armed with more than 30 years of experience, in fact, with Abu Dhabi Commercial Bank, Commonwealth Bank of Australia, the Bank of New York Mellon, HSBC, Standard Chartered Bank, as well as Arthur Andersen. And joining him, we also have with us Mr. Vaibhav Joshi, Chief Digital Officer, Equitas Small Finance Bank Limited, who comes with more than 20 years of experience across banking, financial institutions, information technology, as well as software. His expertise also includes creating sustainable products and solutions on a predictable revenue model. So while we will be having both our speakers here joining us, and Geetika will be moderating this discussion, without any further delay, it's time to deep dive into our very first panel discussion. Let me also urge our members of the audience to keep those questions coming so that we can have Geetika answer them towards the end of the session. Let me also inform you that Mr. Amit Saxena, CTO, Reserve Bank of India Innovation Hub, may also join the panel. So we're just looking forward to having him join. But meanwhile, let's get the panel discussion started. And here we go.
Good afternoon, everyone. I think we have a really exciting discussion planned to kick off our panel discussions for the day. We've been talking about the growth in digital payments for a very long time now, and I think the last few years have been phenomenal. But by the looks of it, everything we know about payments could change with the advent of what we call CBDC, which is Central Bank Digital Currency. There seems to be a lot of buzz around this topic globally. There's a lot of discussions happening in India, a lot of deliberations happening. And in the meantime, there is this whole separate set of millennials which are completely focused on cryptocurrencies today. And there seems to be some confusion around CBDC, cryptocurrencies, all the other new payment modes that seem to be coming in. So I think let's understand from our panelists and experts today, how does CBDC work? What do they think? What form and shape it will take? What is the impact on the ecosystem? What kind of use cases will we see developing? And can it really take off, or is it just a buzz? So let's hear from our panelists today. And so Vaibhav, you just want to come in with a quick introduction and then maybe go ahead and give us your initial thoughts around this topic.
Sure, Geetika, thank you very much. Good afternoon, everyone. So CBDC is a very interesting topic. Okay, digital currencies have been there. Digital private currencies have been there for a while, and all the governments have been kind of thinking about how they can join the bandwagon, because general public as a whole is getting attracted to this digital virtual currencies, and at the end of the day there is no way that those can be regulated, and that is where CBDC becomes extremely important, Geetika, because at the end of the day currency is a legal tender for any government, for any country. And that legal tender is extremely important, because with that legal tender, there is a liability that actually, the central bank actually takes in the form of, accepting that at any point in time. And, currency is the legal tender of the country. Now, largely, the entire globe has been dependent on physical currency as a whole. And, there are so many nuances when it comes to physical currency. And if you talk about, the electronification of physical currency, we saw the advent of, CBS, then, digital transfers, like, Swift networks, NEFTs, RTGS, UPIs of the world, and then the credit debit cards coming in, and, there has been a transition to the digital payments landscape part of it, but transitioning to the next step, which is a CBDC, is going to be, slightly more challenging and slightly more different and a lot more innovative, because it actually, changes the way the entire spectrum of, currency is. Bearing in mind, Geetika, extremely important that, finally, CBDC is nothing but a digital equivalent of physical currency. A legally tenable physical currency, a legally tenable digital currency, and which will have the same ratio, which will be nothing but an exact replica. So instead of, you carrying cash, you carry a digital currency, and that's it. Couple of nuances over there, and this is something that I'm sure RBI and other thought leaders are also pondering, is whether a digital currency can exist without a bank account, because physical currency today exists without a bank account. Okay, anybody who doesn't have a bank account can actually carry physical currency in his wallet. So would there be digital currency that I'll be able to carry on my mobile phone even though I don't have a bank account? And I think, yes, those things, those nuances will get answered as we move on to the pilot that RBI is planning for the digital currency. And there are a lot of use cases, Geetika, that stand even today, because when it comes to currency as a whole, we have seen in the last 2 decades so many innovations happening on the digital payments front. The advent of IMPS followed by UPI, in between APBS and AEPS, and then the entire subsidy, the Jan Dhan Aadhaar mobile trio that actually converted, it rode on PFM as public fund management system, and converted the disbursement of subsidy. And the reason I'm trying to touch upon that point, Geetika, is because as a country, India is a vastly populated country, with a whole sort of population that actually falls under these subsidies, and disbursement of that is a completely used to be a logistical nightmare for the government. And with something like a digital currency coming in also, that would be like so simple as that, because it's like we say, today for banking, we do a earn and burn kind of a thing. The fintechs do, you earn, you burn, and there is finally no recon, there is no settlement, etc. When you do a earn and burn, a digital currency would be as simple as that. You issue a digital currency, you have it with you, you spend it, period. There is no back-end settlement that happens at the end of the day. Okay, there is no intra-bank settlement. There is no end-of-the-day settlement. You don't have to wait to see through if the transaction has processed or not. You don't have to wait to see if there has been a switch level fail. If the recipient bank or the initiator bank has actually processed the transaction. You don't need to wait for maybe 4 or 5 seconds till you get a SMS and so on. It's currency at the end of the day. Okay, you have it, and that's it. It's instant gratification, instant realization. So my 2 cents on that as an introduction. Geetika, over to you.
Thanks, Vaibhav. Thanks so much. Neeraj, you want to come in with your thoughts around how do you think this will function?
Yeah. Good afternoon to everybody. Geetika, so I agree with Vaibhav on a lot of things. Essentially, a CBDC is different from the electronic balances that are sitting in your bank accounts today. It is the same as your currency, but issued in a digital form. And the critical part in this is, if you have, say, 100 rupee note today or 100 rupees in cash today, and you were to claim it, who does your claim lie on? It lies on the central bank. That's where the liability sits. Central bank as the representative of the government. So it's the sovereign who actually issues it and is liable for it. It, in most cases, has delegated that to the central bank. So central bank, as a proxy for the government or the sovereign in a nation, has issued that. So your claim actually sits directly on the Reserve Bank of India in the Indian context. And therefore, if you look at, say, the balance lying in your bank account, which is your electronic balance, you can see it if you log in into your internet banking or mobile banking, you can see it. But should something happen, your claim lies on the intermediary or the bank and not directly on the central bank. So in cases of crisis, what one sees is there is the demand for cash goes up because you don't know whether the bank where you're keeping your money is going to go belly up. If that goes belly up, you have insurance, etc., etc. But essentially, without any of those safeguards, you would lose your money because that's gone. And your claim on the central bank or the Reserve Bank does not hold good. So CBDC will essentially be a currency which will have the same legal status as cash, which you have, except that it'll be in a digital form. Now, that poses a lot of logistical challenges, different from the ones that you face in the typical scenario today. What you're doing is the Reserve Bank prints cash, then disseminates that across the economy, and ultimately you go and you deposit your cash at the bank, and therefore you get a deposit. So your balance in the bank comes in. Then the bank lends that out to someone else and it comes back, and therefore you have a multiplication of the money that you've put into the economy. Now, a CBDC could work typically in that same way. So if you will, in the new scenario with the CBDC, if you hold a CBDC in your account, in your wallet, in your mobile phone, different forms, and all of those are possible. For example, if I say a CBDC in your bank account, so what could happen is the Reserve Bank or the central bank can issue this currency. There is no cash that is printed. It disseminates it through the economy, and I'll come to that a little later. But let's say you go and you place this CBDC in your bank account. Now, while you have the intermediary as the bank, the CBDC of the bank could be held with the Reserve Bank. So it's like, say, in your wallet situation, you have an escrow account which the wallet company keeps with a bank. The same way, the entire money is actually sitting on the Reserve Bank of India as cash. And therefore, typically you would not get interest on that balance. If, however, you convert it into a bank deposit, then your claim on the central bank goes away and is replaced by your claim on the bank per se. And then you will get interest. So CBDC can still work through banks, it can work through wallet companies, it can work through all sorts of organizations, or it could sit only at the Reserve Bank or the central bank. And that's very important to understand because CBDC has to play a lot of roles. It's not just cash. I could have an account-based, token-based. There are lots of infrastructure challenges. Do I do a centralized infrastructure, etc., etc. Now, coming to your themes in our discussion, one was whether it's the right time for CBDC in India. I would say yes. And why do I say this? Consider the following: your internet, digital, mobile penetration is high, which means the mode of a carrier or transmission. And I'm saying mobile, it does not only look at the internet connectivity on the mobile, but otherwise as well. There is text on mobile, there is voice on mobile, there are various ways that can be carried through. Accounts, wallets, penetration with the Jan Dhan, etc., etc. There's a huge number. Virtually everyone has access to an account, either directly or indirectly through wallets. IMPS, UPI, the P2P payment penetration is also high. Your digital payments have gone through the roof. The volumes are going through the roof. You can actually, the payment systems through digital modes work 24/7, and you can send money across the country with even 1 rupee. NPCI is also powering, and we shall see that in a few months maybe, but payments without the use of internet. So this was there earlier through a USSD. They have recently done some more trials, and they will launch this part. There is also a very special thing which was launched recently called the e-Rupee, which is nothing but a specific use case digital money. Now, with all of this, India is in a unique position where we can better estimate the adoption rates because there is already adoption across. But what is important is that there's a vast system. You can have cash-based currency, you can have digital currency, both coexisting. You can take out the settlement complexities, you can improve your AML, CTF, fraud concerns, all of that can be done if you do the digital currency right. The other part was how will it tie into the current monetary system and payments landscape. Now, if you look at two interesting observations.
Just a couple of just wanted to pick on a couple of points that you mentioned there,
sure.
And then maybe just get some perspectives on that as well. So we spoke about the time being right. We spoke about the different forms that it could take. We spoke about the tiering that it could take, right? Yes. I also wanted to get Vaibhav's views around some of these points in terms of how do you think, Vaibhav, the technology around this will work, right? Because we are saying that there may not be any settlements. It's going to change a whole lot in terms of the tech. Apart from all the customer education, the changes at the back end will be humongous. What's your view on how do you think the ecosystem players will adapt to that?
So Geetika, Neeraj made a very important point. He said that, this can be either driven centrally or it can be driven in a distributed manner. And that is extremely important because what happens is, imagine that, CBDC was actually driven in a manner where, you take CBDC from your bank, which is nothing but a digital currency, and then you start spending it. Now, bearing in mind that this is not an interest-bearing instrument because it's the exact, replica of your physical currency, and you have already, withdrawn that deposit from your savings account. What's going to happen is at the end of the day, when you use that CBDC for a particular transaction, the transaction processing still happens. Now, before we get onto the tech angle, Geetika, I would like to give a comparison of CBDC. Let us try to break down a transaction at the technology level and understand how a normal NEFT or a RTGS or a UPI transaction functions vis-a-vis how a CBDC transaction would function. So today, if I have to do a NEFT, I have to log into my internet banking, mobile banking. I have to add a beneficiary or select a beneficiary, select my amount, and then I initiate a NEFT transfer. Same is the case with RTGS. Both transactions go through RBI settlement house. NEFT happens in batch processes of 1 hour. RTGS is real time. For higher volumes, values, of course. But when the transaction gets processed, the money actually gets debited from my account. It goes into a settlement account from where it passes through RBI's clearinghouse. It goes into the recipient bank's, settlement account. From there, it actually gets into the bank account of the individual. So there is a transaction that takes place. There is a reconciliation that happens at the end of the day. There is a ledger entry which is getting passed basis the confirmation from the initiator, and the actual transfer of funds may happen in batches or may happen at the end of the day or in a different form altogether. So there is a whole host of systems that sit at the back end. We are talking about core banking system. We are talking about middleware. We are talking about enterprise service bus systems. We are talking about mobile apps or the internet banking, or even partner apps in case of a neo banking or a PSP app for UPI, for example, a Google Pay, Phone Pay, Paytm kind of a scenario. So the transaction is dependent on a lot of entities and a lot of systems. Now, the question over here, Geetika, is that would CBDC warrant the bank to actually replicate this entire process for CBDC as well? It's a question. We don't have an answer to that, because if it was to be done in a distributed manner, the way digital payment is happening, then at some point in time, at some level, banks will have to have an equivalent of this for the CBDC or build CBDC as a digital payment method. But if that argument was to be discussed, then Geetika, it actually defeats the purpose of having a CBDC, because CBDC then becomes nothing but a digital payment method like UPI or IMPS, and which is not the case, because CBDC is not that. In that scenario, it comes about, a gratification of or realization of a CBDC when a transaction takes place. So in that scenario, are we talking about the central bank having some kind of a mechanism wherein a CBDC is actually, instant gratification or instant realization, and then there is a reclaim process. A reclaim process is nothing but conversion of CBDC into either a physical currency or converting it into sending it back into the banking model. Okay, because at the end of the day, a CBDC has to be, the liability has to be on the central bank and not on your local bank. So, these are the intricacies that have to be worked upon. Now, in a country as vast as India, where there are so many use cases, and let me spend 2 minutes more on that, because the use cases that we spoke about on the technology front are very simple use cases where you go to a bank branch, or you go to your mobile app or internet banking app or a partner PSP app, and then you carry out a transaction. But imagine, the domestic remittance scenario, and the millions of BC agents who are there in the country, who actually help a lot of our countrymen in an assisted model, where the blue collar worker walks into a BC agent outlet, he hands over physical cash, and it's a cash to bank account transfer, and a family back home in the village would withdraw it. Imagine a CBDC in this kind of a scenario. Okay, because CBDC in this kind of a scenario would kind of have multiple layers. So one is he can do a CBDC transfer to the BC agent, and then that BC agent converts from CBDC to a banking instrument, and his family withdraws from an ATM or a micro ATM, or he actually directly sends a CBDC, and from his mobile phone, smartphone, he sends a transfer to a bank account. So first leg is CBDC, then it gets converted into a NEFT IMPS, and it gets into the recipient bank account, and then the bank account, when he goes for a withdrawal, the recipient. Okay, so there are multiple systems. The simplest renderation of that would be CBDC to CBDC, and allowing conversion of CBDC at the last mile BC agent or the branch. But if that argument, now let me take a step back, Geetika. If that argument was also to be discussed, then are we talking about, multiple systems at the bank level? Because at the end of that, so that is an area to ponder, and that has actually had a lot of thought leaders and think tanks thinking on that how is it that exactly. So there are multiple ways to that. That I so wish that Amit would have joined us, and he would have given us some thoughts on what is actually RBI thinking on this, because the entire industry is trying to understand that how is it that we are trying to go about it. So today, and sorry, 30 more seconds, and then I'll hand it over to you, Geetika, again. Today, when I look at a UPI transaction, when I dissect a UPI transaction, okay, I initiate it with a VP or a QR code. There is an instant debit, there is a UPI switch, then there is a NPCI leg. Okay, then there is a recipient bank UPI switch, and then there is a deposit that happens, and there are multiple failure. Because there are multiple steps, there are multiple failure levels as well. Vis-a-vis, if I actually hand over cash to my grocery shop, there is no failure point. It is whether the physical note is legible or not, and a CBDC can be as simple as that. And that is where how instant gratification happens is important. So if in the pilot we are able to solve the how, then CBDC is the future. There's nothing that will even come close to it. While the traditional banking, the digital payments will all coexist, because at the end of the day, CBDC is going to be a non-interest bearing instrument. So I firmly feel that somebody like we will only carry the digital currency to the equivalent of physical currency that I would like to carry today, okay, which is my day-to-day use, because then there will be methods to convert my deposits into digital currency and back from digital currency into deposits, because at the end of the day, I would like to earn interest, on money that is lying in the bank. I may not want it to be lying in a CBDC and then it's not earning interest. Right. Over to you, Geetika.
Thanks, Vaibhav. So Vaibhav, you touched upon a few very crucial points in terms of the interoperability between currency, fiat currency as we know it today, versus CBDC once it comes in, right? Neeraj, I wanted your perspectives in terms of how do you think these two can coexist? What are some of the monetary policy implications to and cash in circulation? What are some of the implications once CBDC comes in?
Yeah, so it's a very interesting point that you raised, Geetika, because I don't think once you introduce CBDC, that you will have cash go away. Cash will coexist. It will remain a large part of your economy. There is already cash in there. I don't think you can take out the cash completely. So both will coexist, and therefore, to the point which Vaibhav was mentioning, saying, will we need to create a separate infrastructure for the CBDC? My answer is yes. Because the CBDC settlement has to be different from your regular cash currency settlement. And I'm calling it the cash currency settlement because that's what we have currently, which is your bank accounts, et cetera, all of those. The moment you introduce the CBDC and try to make the payments, there will have to be a parallel system created, which settles the CBDC part. The beauty of or the adoption rates will be high if you were to look at two things which most people would want to have. One is anonymity or privacy. Another is to be able to pay or settle like cash, instantaneous. So if you marry these two things, you come to a situation where currently I can put like 2 lakhs, 5 lakhs, 10 lakhs, 2 crores, 20 crores, 200 crores of cash in any one place, and no one knows about it till the law enforcement tries to figure out it. Now, so you have to balance both the things, right? How do you ensure that your CBDC settlement happens, but it remains anonymous? How do you marry between an account-based or a token-based? The equivalent of just simple cash with complete anonymity is token. CBDC with an account is the other end of it, and both can coexist. So in my opinion, what you will need to do is have, again, both these methods. So you should have, say, a specific use case CBDC. You could have, for example, and the reason why I bring that out is because there is a lot of subsidy, food, fertilizer, kerosene, LPG. Roughly 3 lakh crores is given out by the government on an annual basis. COVID times it's gone up, and but it's roughly about 3 lakh crores. Also, the banknotes in circulation go up by about 4 lakh crores a year, roughly. And coming with that is an expense of 4,000 crores. So long as you can introduce CBDC to this extent, and of course the government's trying to send out as much subsidy or disburse as much subsidy through digital means as possible. Now, if you have, say, a specific use CBDC, let's say, for example, I give out fertilizer subsidy through a specific use case CBDC. I can give it out as a token CBDC, which is fabulous. It goes very fast, quick, but can only be used. So I'm sending it out to the mobile of the recipient. They can use it only at a store which sells the fertilizers. The moment it goes there, till then it is very fast, quick, everything is fine. Then once the fertilizer seller receives it, it becomes open, because then you can use that. Or maybe you can restrict it further, that he has to use it for purchasing fertilizer. Because if you want to capture the entire trail, you can keep there. Now, at some point in time, it has to become open-ended and get removed from the specific use case at some point. Once that happens, you could use similar ways like wallets are, which could be for low value transactions. You could allow anonymity and fast movement, but for higher amounts, you can say, has your KYC been done, etc. Thankfully, in India, even your wallet's KYC, if it's above a certain amount, your KYC is already done. So there is a large number of people who have got, virtually everybody has their KYC accounts. So you could have the smaller amounts moving, say 500,000, 2,000 rupee payments going through the tokenized way of movement, which is more anonymous, much faster. Little needs to be done, and it's like, I give it to you, you have it. For the larger sums that move through, you could have a restriction that it has to be an account-based movement, and the way it could get done is, as I mentioned earlier, the central bank could hold wholesale CBDCs, as I may call it, which is the intermediaries. That's one way of doing it. The intermediaries in turn allocate that much of CBDC into different accounts as people need it. So I will have two accounts, and deposit account, which earns me interest. And when I want to transact, if I want to transact smaller values, then I can use the tokenized, but I can move the money, convert my bank deposit into the CBDC at the bank. So then it comes into my CBDC account, and then the settlement goes in a different manner. and then I pay to the other person, which is much faster. My claim is on the central bank, and you could have the interplay go through, and it's going to be an interesting journey. And I also agree with Vaibhav that I was looking forward to this discussion and having Amit ji come in and explain some of the thoughts that they are having. And that would have given us a lot of inputs into what's going to happen. But yes, this is a very, very interesting subject. The technologies that get used, the ways that you can do, I think there can be a hybrid model which will ideally evolve, where you do some bits of tokenized, some bits of account. So you have the benefits of all and the ills of all as well. But by restricting the quantum of the transaction, you can have your AML satisfied, you can have your entire monitoring satisfied, you can bring in far greater revenues into the tax structure. We seem to have, of course, now the GST is going up, but otherwise we are a very poor taxpayer nation. Very few people pay tax. So CBDC can resolve some of this to some extent. How much will get taken by people is, of course, to be seen, but there are enough and more people as well for whom it doesn't really matter, because I don't hoard cash at home. I really want the convenience, and I want to have a claim as my currency, and I think both can coexist. So it really opens up for an interesting piece. You could transfer money overseas to that could take out in a flash, and that could again be an interesting use case. But I think the subsidy case can start off as one of the use cases. That will be that will give you the straight away mechanism to disburse CBDC when you issue. It reduces your cost. Of course, it won't take it away completely, but it will reduce the cost of managing that currency. It goes very fast. It can move into the economy, and adoption would be far better. In
so Neeraj, you spoke about, right?
Yeah.
So you spoke about the use cases and how the two can coexist between fiat currency as well as CBDC, right? And then one of the points that we've been touching upon subtly is the whole tiered structure, right? Will it be like a tier one structure? Will it be a one-tiered structure? Will it be a two-tiered structure? Will there be intermediaries, right? One of the hypotheses I've also heard is about the RBI can directly reach out to customers. Banks may get disintermediated. Any thoughts around? Do you think that's a possibility in with CBDC? Is that one of the, or is that just some buzz going around?
Okay, so my view is banks play a far greater role in the economy than just handling the currency. So you cannot take away the banks. Let's take the simple example. If you take off all cash from the economy, all your accounts move into the central bank, it's all currency. You will not earn any interest. The amount of CBDC that will be required to power the entire story will be far greater, because there is no multiplication of your money supply then. So the banks and the intermediaries actually, if you issue, say, 1,000 crores worth of bank notes, it ultimately results in, say, 10,000 or 50,000, and you can control that through the market operations that the RBI does. But essentially, it has a multiplier effect. So you go, you push out 1,000 crores, 1,000 crores goes into the deposits. The banks can lend up to, say, 90% of it. So 900 crores goes out. again creating, that can again come into deposits, and so on and so forth. So you will have a multiplication in there. That will go off if you disintermediate the banks completely. Secondly, banks and the other intermediaries handle KYC, which is another big aspect. Just imagine the RBI taking care of all KYC. I doubt it. I don't think any central bank will want to handle the KYC for everyone. So banks will not get disintermediated. Central bank doesn't lend to individuals or companies. There will be no credit. There will be no deposit. Banks do play a very vital role. So it's not only the currency.
Great points, Neeraj. I think two very pertinent points. And I think, Vaibhav, you've been a banker throughout. Want to get your perspective as well on this top point around disintermediation.
So I completely, agree with Neeraj, because at the end of the day, banking is about not just about currency. It is about liabilities. It is about assets. It is about giving loans. It is about taking deposits. It is about, enabling an ecosystem that actually fosters the economy. Okay. Banking is a very critical cog when it comes to economy. And by bringing in CBDC, we are actually talking about moving forward. We are not talking about going back in time. If we were talking about, replacing the banking system or, eventually banking phasing out, then, CBDC is nothing but, a same old, a modern version of a barter system or a modern version of, some currency that is there, but, it's only of value to people who have it. Okay. And, look at the landscape, look at the population of the country, and let us understand how many percentage of, our citizens are actually cash rich people. How many percentage of our people are who are daily wage earners. Okay. They earn every day, they spend every day. And, what is the importance of banking in everyone's day-to-day life is where, when it comes to saving, when it comes to building a credit history, when it comes to, building your profile, financial profiling and stuff. And then eventually, taking you to a level where, you start fulfilling your aspirations, which may be a two-wheeler, which may be a four-wheeler, which may be a, a small shop, which may be a flat, which may be a bungalow, and which may be, your kids' education, which may be, their marriages, anything and everything to do with it today is completely dependent on, the financial profiling of an individual. Because unless you are, a big rich farmer in one part of the country, or unless you are, some individual who is sitting on piles and piles of cash, okay, I don't think this is possible for, majority of the population. And honestly, CBDC is nothing but replacing the physical cash. So it is, so the value of a CBDC on the digital front is tremendous if we look at the use cases. But the value of a CBDC, if you are looking at, replacing the banking system, then it's actually none. Because at the end of the day, a currency cannot ever replace even 2%, 1% of what the bank brings on table as an industry, banking brings on table as an industry, as an institution, and so on. Yes, there are a lot of, technology aspects that are linked to it that needs to be answered. So, those are the questions that will need to be answered. For example, and there are a lot of other aspects as well, because taxation is a very important aspect. And, Neeraj touched upon it briefly. CBDC cannot ever be compared to a physical currency like to like, because a lot of people hoard cash today. Before demonetization, it used to happen. Even today, it happens in certain parts of the country. But then what happens is, that is to save on the tax aspect. A physical currency or cash is today looked in the country as also an aspect where, where taxation can be saved in full or in part. Okay. Will a CBDC ever be able to replace it? I don't think so. CBDC would rather bring in a more, inclusive approach for citizens to come into the tax bracket, wherein it would kind of show them the benefit, what digital payments has been showing, of course, but to the next level, and then bring those people in. So yes, physical currency and CBDC both will continue to coexist. It is still a long time before actually CBDC can change physical currency, because first the mindset has to change. Okay, digital payments has taken off, Geetika, but digital payments, what is the percentage of the population who is using digital payments? USSD was a star product, but USSD had issues, and then it was actually UPI which took it to the next level. Today, UPI, after having incorporated USSD, we see that the percentage of adoption by feature phone users for penetration of digital payments, it is slowly picking up. Whereas the percentage of adoption of UPI users, but at the end of the day, it is that same pie. Okay, the pie is not getting increased. If you look at from a percentage perspective in terms of the population, then we are heavily reliant on the phygital or the physical channels. Then we are on the digital, because at the end of the day, all the banks, all the fintechs, all the neobanks are eyeing for that same set of populations who have smartphones and who are used to transacting on UPI. Okay, there are efforts and innovations being made to include the underbanked and the unbanked into this, but that is to a limited extent, and they use it to that limited extent only. So and I don't think CBDC is going to really change that angle. Okay, because today also they have access, and there is no cost if I have to do a UPI transaction at the end of the day. Being a user, I can just walk into a shop, scan, pay done. I can just put a VPA, transfer done. All those things are there. Question is, do I want to hold that much money into my bank account? Will I hold that much money into my bank account? Okay, if that question gets answered, then we start this discussion on whether CBDC will actually, come close to the banking infrastructure that is there.
Great.
I have one more point, Geetika. On this thing, I have one more point.
Sure.
Look at your capital markets and your shareholdings.
Yeah.
Now, everything is demat, right? Where does it get held? Either NSDL or CDSL. Two places. How can you access it? You access it through intermediaries. Even though there is a CBDC kind of a situation, the intermediaries, even in that way, add value over and above your base thing, which is what the CDSL or NSDL provide. They have the holdings. They maintain the ledger. They'll convert shares into this place to that place. Right. Now, look at what, say, an ICICI Direct or HDFC Securities or Kotak Securities or all of the other intermediaries, the brokerage houses. How do they create value in there? They provide credit through margin trading. They provide all sorts of options. They'll hold your orders for 5 days, 10 days, 20 days, buy it if it comes to this, sell it if it comes to that. That is what the banks do in the currency situation as well. So you cannot take away the banks and even the wallet companies. I mean, I'm not excluding them. They are an integral part, and they've actually done a lot to improve the payments infrastructure in the country. So all of them, because there are many other minds looking at what can be done around this core thing and add value on it. That's where the adoption rates go up. That's where usage goes up. It's not only because you have something where just movement, it doesn't work on that basis. So over to you, Bye.
Great. Thanks, Neeraj. Thanks, Vaibhav. I think excellent points made, and very, very pertinent points in terms of KYC, adding a lot more value to the customer, multiplication of money. All of these make the intermediaries a lot more important in the entire process, right? We are just reaching the top of the hour for our discussion. I just wanted to get final closing remarks, and if we can just crystal gaze and just make a prediction in terms of where do you think this CBDC revolution will land and how will it stabilize maybe 5 years from now? Vaibhav, if you want to go.
So, Geetika, with the advent of fintechs, with the advent of neobanks, with the advent of both on the digital and the phygital side of things, with the advent of corporate PCs, there is a lot of momentum that has been happening on the digital payment space. CBDC, when introduced post-pilot, will also start getting that kind of a momentum. There will be times when these fintechs and neobanks would may directly start working with the central bank using the existing banks only from a licensing and a sponsorship perspective, nothing more than that. Okay, because there would be no settlements where it would come to CBDC. But having said that, today, and the reason I am specifically talking about them in my concluding remarks is because banking as a infrastructure, as a industry is going to continue. Banking will continue to evolve, innovate, and a CBDC is going to be one cog in the wheel for banking. Okay, but from a deepening perspective, from an acceptance perspective, it will be these players who have actually taken digital payments to the next level, who will also take CBDC to the next level. But CBDC will become one of the offerings that would be there. It will actually replace physical currency to an extent, and from the point of an instant gratification or instant realization, to an extent, it will start replacing a part of digital payments that is there. Okay, so if I have to look at CBDC, I would look at CBDC as a another method through which I would be able to transact instantaneously. I would be able to make payments. I would be able to send money. I would be able to receive money. I would be able to purchase, and I would be able to sell. Okay, but having said that, so that is one of the methods. Having said this, these fintechs, neobanks, where do they also make money? They make money when they coexist with a bank on a banking product from the revenue as a part of the revenue that the bank is making. And when banks also partner with these entities, they also take a part of the pie from so it's a marriage of sorts over there. Okay. CBDC will become one of the products. That is how CBDC will deepen. That is how, both on the digital side and the phygital side. Yes, with the mindset change in the population, in the country, in the citizens, the acceptance of, something like a digital currency, moving away from phygital currency and looking at aspect where, like things like taxation, getting into a tax ambit for MSMEs and retail merchants. Okay, for the blue collar person who thinks that if I put my bank money into bank account, I will be liable to taxation. Those are the aspects. If there are more inclusive, there are more relaxations on that front, then in all probabilities, CBDC will shoot up. But CBDC, yes, I do see a good amount of penetration once launched. But for that, we need to see how the pilot goes. There are a lot of use cases where I see CBDC can come in and it can make things like this, but it really depends on a lot of factors that we discussed: technology, whether it's centralized, whether it's distributed, speed to market, what kind of hosting it is, instant gratification, what is the role of banks, is there any technology infrastructure dependency on bank, what kind of infra is the central bank building. Okay, are we looking at something like a blockchain for CBDC, because we know the limitations of blockchain when it comes to speed. Okay, are we looking at something like a blockchain at the back end and then bringing in, then there will be adaptations of AI, ML, and all those things also, when it comes to these things. But yeah, it's a very exciting future out there, Geetika, for CBDC. Very exciting future.
Thanks, Vaibhav. Neeraj, closing remarks?
I think CBDC will definitely come up. And the reason why I say that is, of course, a large number of central banks are also looking at it, but our central bank is also looking at it. As the digital transactions go up, and we've seen that, CBDC can bring in the next innovation streams. It can innovate the stuff. It can help grow the economies. It can foster greater relationships with other countries by being able to move money internationally very, very quickly. But will it replace the cash economy? I'm not sure. Will it be a very significant part? In the next 5 years, I don't see that happening, because this is a time for testing. This is a time for putting it out there. This is a time for adoption. And I think the central bank should put out a few different ways of doing stuff and see how it goes, because no one knows at this stage. There are roadblocks that could come up. There could be bumps that can come up. But the fact that CBDC will be there, I don't think I have a doubt about it. Will I adopt it? Yes, wholeheartedly, because I love to dabble in technology. I enjoy doing these things, and just from a perspective of ease, from a perspective of convenience, from resilience, I think it's a great thing which will happen. But one place where I think it'll make has the ability to make a big impact again is, as I mentioned earlier, one, subsidies, specific use case ones. Those I see definitely coming up. The other one I see it doing, as I mentioned, on the remittances, the international remittances. The third one is on the capital market transactions. You already have your shares which are sitting, which can be easily transacted. The money flow at the moment is moving from bank to bank to bank, and going through a number of hoops. If you marry the CBDC, which is the currency part, into the shares element, which is already centralized, you have those two centralized structures. You can have literally immediate cash buy and shares buying or selling, or capital markets can be transformed. You could say, I buy the share now, you get the delivery of the shares, your money goes off. You say sell, you get money. And so the movement in the capital markets is another one place where I see it making a huge, huge impact, at least has the potential to, and I think it will go down that path. Some of the use cases, if you pick out your use cases properly, this has a lot of potential. So I think CBDC is going to come in. It will stay on. It will start moving. At what rates is very, very difficult to predict. But given the next generation and people wanting to do more digital stuff, I think it will bring out a lot more innovation as the stuff starts coming out, as we get to know more about what is coming and how they're planning it, and the architecture, the technology that is used. We have the minds, we have people looking at it. Innovation will come, and you will be surprised at what, I mean, we can't even think about everything now, but in 5 years, it'll be a very different landscape, even though it might be a smaller percentage as opposed to cash. And obviously there is saving for the economy. So all in all, I look forward to this, and I'm hopeful that this will be a big success. Over to you.
Thanks, Neeraj. So we've had a very exciting discussion today. We've covered a range of topics, from regulation to ecosystem to architecture to use cases, and also we've done some crystal ball gazing to say where will be, where do we think this can land up, right? But one thing is for sure, we think it's definitely coming. We think the industry is excited about it, and everyone's waiting for the regulations to come in and see how this will change the entire payments ecosystem as we know it. Thank you so much, Vaibhav. Thanks a lot, Neeraj, for this very, very valuable discussion. Thanks a lot.